Good afternoon, everybody. It's going to be our summary markets weekly trade plan. Starting off with the calendar, then we'll move into some analysis for the futures market. So starting off with the calendar here, it's a pretty lackluster week. There's not a whole lot going on, especially compared to what we had the last couple of weeks. We do have a few high impact events that we definitely want to watch out for. The 10-year bond auction on Wednesday, the 30-year bond auction on Thursday. Those are probably going to be the largest events this week. But we also have some PMI data coming out Monday, and we have unemployment claims on Thursday. There's nothing on the calendar for Friday. So realistically, just keep an eye on those bond auctions as they're going to be happening in the afternoon at 1 p.m. And then keep an eye on that PMI data tomorrow, right after the bell. That should be, for the most part, the highest impact are those bond auctions and PMI. But all right, moving on to the analysis here. Let's go take a look at our trade plan from last week. So last week, we needed to stay above 55.29 to look bullish, and it was actually looking pretty good early in the week. They did break that level, and they went for a little run there, but they found a lot of sell pressure just before our target. So our target was that POC node, and it did hit the node. It just did not hit the exact level. So that first target around 56.07 was pretty much the top, and then we started to sell off very aggressively. And then we had a lot of headlines coming out about the possible recession, and they're probably going to have to cut rates by 50 basis points in September, 50 basis points in December as well, because of all these recession fears, because of the numbers that came out on Thursday and Friday. They were very bad. So that's why we started to sell off pretty aggressively. And then our bearish trade level was 54.71, and that hit both of our targets. So both of our targets, all the way down to 53.70 for about a 2% drop, those were completed. Now looking at NASDAQ, pretty much the same thing. The bullish target, the first target, just barely got front ran. So they were not able to hit that 856. They topped out, I think, around like 700 to 750. And then we started to sell aggressively on Thursday and Friday, hitting both of our bearish targets. So bearish targets going all the way down to 648 for a drop of about 2%, 2.25%, I should say. So pretty nasty drop there. But all right, moving on to this week's trade plan. So this week, we need to stay below... Let me see here. We need to stay below 53.50, which is the lower portion of this node right here from last week. And then our first target will be the Valeria low of the first week of June. And then our second target will be the Valeria low of the week before that. So going into 52.95 and 52.17 for the lower targets. To the upside, we need to reclaim the Valeria low of last week, which is going to be around 54.44, looking for that POC around 55.14, and then the Valeria high around 55.83. Okay. Moving on to NASDAQ. NASDAQ needs to stay below that same node, and then looking for the POC of the first week of May, which is around 18,196, and then the Valeria high of the week before that, which is around 18,024, which is a drop of about 2.25. To the upside, we need to stay above last week's Valeria low to look for that rotation. You could target the POC if you want to. That's a pretty close target, which is going to be around 231. Realistically, you probably want to look for the full rotation back into 676. And then we have the Valeria low of the week before that, was that July 15th? And that's going to be around 928. That's a 5% gain, so that's probably not going to happen. But that is best case scenario. One more thing I wanted to show you here. For the longer time frame, guys, I wanted to throw on some moving averages here just to show you kind of what we're looking at. So for the longer term trend, we are starting to break some pretty serious levels. Typically, if it's a short-term pullback, it will lose the 8 EMA, which is the blue line here, and then it will kind of pull back to the 24 EMA, which is that orange line. And then it will bounce before failing that level, kind of like right here. Look at this uptrend here. It pulled back to the 24 and bounced every single time. So that's a pretty healthy uptrend. Once we start to break the 50, this is the 50 moving average, not EMA. It's a simple moving average. that's typically where the mid to long-term guys start to get a little scared. So we started finding a lot of support there the last couple of weeks around that kind of 5480 level to 5500. And then on Friday, we just completely lost that level. So if we don't see some buy pressure coming in this week, this is looking pretty bad for the mid to long-term guys. We're definitely getting into one of those deeper corrections. You can see the corrections from back in like 2023. You had a correction right here in 2024, and then these deep corrections back in the late 2022, early 2023 as well. So typically when you lose that 50 EMA, or sorry, 50 moving average, if you don't recover it very quickly, the correction's going to be pretty serious. So just be on the lookout for that. We really need to reclaim that 5,500 pretty soon. And same thing goes for NASDAQ. NASDAQ is even weaker because if we look at that 50 moving average here, we actually back tested it perfectly on Thursday, and that was the top. We back tested it on Thursday and then just completely sold. So the mid to long term guys definitely falling into that recession territory where they're hearing those recession headlines and they're probably letting go a lot of their positions. We were seeing a lot of bearish delta last week as well, so people were definitely letting go of some positions. So just be careful if you guys are trading mid to long term. It does look like the trend is definitely shifting a little bit. It doesn't look terrible on the weekly chart. So if we look at the weeklies on ES and NASDAQ, you don't really see that insanely deep correction just yet. We're still staying above that 50 weekly average. If you start to lose that 50 weekly average, or even realistically the 24, you start to get a little dangerous there to the downside. So you are losing the 24 there on NASDAQ. You have not lost it yet on ES. So just keep an eye on that. Something to watch in the background. But all right, looking at Bitcoin here. So Bitcoin, we have been selling off quite a bit here. Look for that POC node around 57.8. And then we have that buyer demand around 56 to 54. That should be able to bounce you a little bit. But I don't like this overall trend here. This overall trend is getting a little bearish. Where's my drawing tool? Oh, here we go. You can see that we have kind of a rollover top happening here. You put in an aggressive move up, lower high, and then just continuous lower highs here. They're definitely not looking great. They do need to find some buy pressure pretty soon. If they can get back above 63K, look for that value retrace back to 67. Same thing for oil. Not seeing a lot of strength on oil either. The markets are just kind of bearish across the board. So here's the buyer demand on oil. If we don't bounce here, it's looking pretty bearish down to 70, possibly down to 68, 67. There's a couple of old lows, a lot of demand on the buy side around that 70 to 68 area. Moving on to gold, it's like the only commodity that's actually maintaining its bullish trend here. You do have a nice little gap up, obviously, on the rollover. The rollover has been protected so far. If you can hold above that 2470, then it does look strong to continue back into that 2540. We have a nice, strong node forming on the high here. But be careful, there is a really big rollover gap that they're probably going to try to fill in. That gap is right here. So just keep an eye on that gap. If we start staying below that node, you're probably going to fill that gap in. Finally, let's take a look at the dollar really quickly. So the dollar has been selling off quite aggressively. You can see on Friday we started selling. The next major support is around 102.50. If it loses that, it's looking pretty bearish, possibly back down to 100. Now, here's the weird thing. There's not really a correlation here. So typically, if the dollar was selling like this would be extremely bullish for ES. But the problem is, if the dollar is selling due to recession fears, the market is kind of selling due to fear. It's not selling because of the dollar correlation. So it's mostly just fear driving the market lower, fear of a recession in the next, 1 to 2 years, whatever it may be. One thing that we are getting the correlation on are the bonds, right? The 10-year note is the opposite of the 10-year yield. The 10-year note has been running pretty aggressively. So if you look at this on kind of the longer-term chart, we're sitting in a lot of support here. If it starts to bounce out of this support, bouncing above like 116, that's looking pretty bearish for the equities market. And if I show you some more bond charts here, look at these. Look at the 2-year chart. 2-year is running, and then they're all the same. 10-year, 20-year, 30-year. Now look at the yields. The yields are collapsing, right? So the bond market is pricing in those rate cuts finally. The bonds are inverse rates, right? So if the bonds are running this aggressively, they are pricing in the possibility of those rate cuts happening very soon. So keep an eye on those bonds. They are getting very bullish. But all right, guys, that is it for now. I appreciate you guys watching. I will see you guys for our live stream later this week, tomorrow. And yeah, enjoy the rest of your weekend. Peace.